Esteban Duarte, Bloomberg, Deputy Governor. We have following questions. Basically, we wonder whether removing the hiking bias was discussed in the deliberations of your monetary policy meeting earlier this week, and in relation to also to that meeting, why the Bank of Canada seems to be more comfortable retaining your hiking guidance than other central banks.
Okay, thank you. So I guess probably the best way to describe it is what we put in the press release, and I echoed in my speech that we considered that the detour that we thought we were going to have with weakness in the fourth quarter and the first quarter of 2019 was actually going to be a little bit longer. And so, you know, in our statement, we talked about a higher level of uncertainty with respect to when future increases in rates may occur. And so, you know, from our perspective, and what I tried to draw out in the speech is we expected some weakness from the oil sector decline, and certainly for Q4, that was fairly aligned with what we saw in the results. And at this point, you know, we're looking to see if some of that other weakness is also temporary or if there's more persistence to it. And we're just going to need more data before we can assess that. Did you discuss the possibility of removing the hiking bias in your last meeting? I just described that we kept it in there and talked about the fact that the detour is going to be longer, and so the decision was to keep the language with respect to a future hiking bias. Can I add another question? In your basically related to the fact that you said that there is not enough data, do you expect that you have enough indicators or enough information by April? So for April, we've got a number of things that are changing for us or being updated. And so April tends to be a fairly important time in the cycle because the first analysis that gets done is we update our expectations for potential. And so we'll do our analysis to look at trend labor productivity and trend labor input, and those numbers will be updated and give us a new level for that. In addition, the staff will look at what is the neutral rate of interest for Canada and decide whether or not they feel that there should be any shifts in that range, which is currently at 2.5 to 3.5. And as I think we've tried to describe, this is coming from a number of different models and scenarios, and it gets put together into a range, but some of the inputs to that can have wider ranges on either side of that 2.5 to 3.5. And then, of course, we will have more data between now and then, which can also help to inform our view. So, you know, we purposely put in the statement that we're going to need more time. And so I think, you know, while we're going to have a lot of new updates for April, I'm not going to prejudge an April decision one way or the other.
We're going to go to BNN.
Hi, Mike from BNN Bloomberg. What's your message to indebted Canadians who might think the day of reckoning is still a long way off in the distance?
With respect to indebtedness in Canada, I'm not quite sure what you mean by a day of reckoning. So what I can comment on is, you know, the current level of household indebtedness is something that we've been focused on for a number of years, and we continue to highlight this as our number one risk when we do our analysis or number one vulnerability when we look at our analysis in the financial system review. Now, what we have observed as of late, and in particular since the new B20 rules have come in, is that the quality of new debt that's been mortgage debt that's been approved since the beginning of 2018 has been of a higher quality. And so while we haven't seen a tremendous amount of movement in that ratio, what we are seeing is a higher quality of new debt. So we think that's a good sign, and obviously important indicator for us as we think about
you know, the vulnerabilities that households could have if they had an unforeseen shock.
And what does the Bank of Canada need to see in the economy to feel comfortable raising rates?
Well, you know, when we look to set policy, and what we're focused on is our inflation target, okay? And that inflation target, of course, is not what it's going to be next month or tomorrow, but you know, all of our forecast and modeling is done over about a 24-month time horizon. So what we would need to see in our projection for growth is inflation target that was starting to move into a range where we felt that a policy response was required. And you know, we've discussed this in the past. It's kind of looking out 18 to 24 months from now, and so sometimes a decision that we've made at one point in time might not necessarily make sense on the surface, which is why we try to explain that, you know, everything is basically anchored off what those inflation expectations would be because of our model inputs.
Right. And my last question, would the bank step in to support the loonie if it fell below 70 cents US?
Well, we don't typically do any currency intervention. It's not part of our policies that we would focus on. If the loonie fell dramatically at any point from a level, we would want to understand why that's happening. But you know, typically what we do for our forecasting and what we do with respect to monitoring movements in the Canadian dollar is we take them as a given. They get updated every time we do a new quarterly forecast. And from that perspective, you know, we monitor them closely, but it is not part of an active toolkit that we use.
And Esteban, did you have a final question? That's all the time we have for today, so thank you everyone for coming.
Thank you.